I'm your host, Cesar Delgado. For today, this is your agricultural news and information about the agricultural industry in Midwest alongside in the countryside. Yesterday was Super Tuesday in several states that they were picked the nomination for the Republican presidential candidate for yesterday's afternoon on the Michigan delegation and the Minnesota delegation in the Midwest alongside with Nevada and New Hampshire. Iowa calls for E15 to the President Joe Biden to be expanding for E15 for year-round for the United States and especially in Midwest. In the Department of Agricultural announced that the farmlands is declining one. 9,000 farms is losing for every day in the United States. This is your agricultural news and information for this morning. We're back to talk with Karl Seltzer from conus, and we were talking with Toni Dunker from Advanced Trading in Quincy, Illinois. We were going to talk about the livestock insurance for the farmers and ranchers. Keep tuned with us for this afternoon's show on back. Welcome back. We were talking with Karl Seltzer from conus in Michigan. How's it going, Karl?
It's going very well. It's soil's starting to warm up a little bit. Guys starting to get spring fever. We've seen a little bit of scratching in the fields, and it's starting to pick up a little bit. Guys have switched, flipped the switch from marketing grain to planting fields. So we're in that seasonal transition period right now.
Good to hear that. All right, let's start with the trade in Chicago for today on the corn market and beans for this week. What's going on with corn market?
Corn, we've started to see a little bit of strength. It's separated itself from the soy complex and especially the wheat today. Wheat really a lot of pressure today. The nearby March wheat contract, even though it's in delivery, down 24 and a half cents. May down 20 cents. The deferred's not quite as bad, but we had reports today that China had been in and booked a large volume of soft red wheat here several months ago. News today that they have maybe washed out of some of those bookings. We'll be watching trade closely for the next rest of this week, see if we get some confirmation. And of course, we have that WASD coming out at the end of the week. We'll talk about that in a bit. But for today's trade, it was all on the wheat complex and the pressure we saw there. Switching over, the soybeans also under a little bit of pressure today, just not a lot of buying interest in that soy complex. And corn, such as you asked, Caesar, looking at the corn, we did see a separation today. May corn up 2.5, the new crop December contract up 1 3/4. Corn just has a little bit more buying potential underneath it, and there's concerns over the size of the South American corn crop. Some of those later developing fields, especially in Argentina. If we see a return to the La Nina weather pattern, some thoughts we could maybe see some drought, late summer, early fall drought that would impact yields in Argentina. That's given corn the support. Also, with corn, we're starting to see a little bit more feed demand and a little bit more usage domestically for ethanol. Ethanol continues to run just slightly ahead of what the USDA had projected, so that's given us some support in the corn complex. But another thing is, as we said, spring weather getting here, starting to get ready for spring planting. Maybe corn trying to pick up a few acres with that equilibrium with soybeans. Looks like corn just showing some strength, and of course, it's the planting season is approaching in the U.S. South America is in the midst of their harvest, but is starting to plan next year's acres. And there's some concern that if corn doesn't rally, we won't see the big plantings that we need in Brazil on either the first or the safrinha corn crop. So corn, like I said, finally starting to separate itself a little bit from the other grains and show a little bit of strength. And really, all three, corn, soybeans, and wheat, oversold when you look at the charts, and that is giving us support across the. Those have started to slip back a little bit. Packers just looking at the cattle inventory and say, the inventory is a little better than we thought, and we just don't need to push quite as hard. Also looking at cattle weights, and we have cheap corn right now, relative cheap corn values. And when we look at it, feeders willing to hold these animals in the lots a little bit longer than they have been. And what we're seeing is the average carcass weight coming in almost 8 pounds higher than it was a year ago. So we're seeing, yes, fewer animals on feed. Placements have been a little bit lighter, but at the same time, we're still processing a large volume of beef because we're picking up this extra poundage. That's put a little bit of pressure on the entire complex, as well as the relative strength in the U.S. dollar and some economic concerns. Trade a little bit worried that interest rates may curtail some red meat demand this summer during the grilling season. And that's just with the cash not running up, it's caused futures to back down a little bit. I expect futures to end up dipping below the cash eventually here, but right now they're walking hand in hand down. Hogs have also fell into that a little bit, but the hogs are taking a little more pressure from the ongoing liquidation in the Chinese hog herd. Right now, China losing $24 per head on the hogs they're feeding, so they're more interested. They're in a tight situation where they have to buy domestic pork and put it into storage and support their farmers, and at the same time they're importing cheaper pork, all things comparable, and putting that out in for the consumer to consume right away. So we're seeing a little bit of a different shift there, but all in all, the complex, the livestock complex, holding at pretty good levels, but does feel it is getting a little top heavy. As long as the feed grains remain depressed, I think we see cattle hold where they are. If feed grains start to rally, we'll have to watch those placements and see if they continue to drift backwards. And guys, continue to trim their herd sizes. So that's definitely a factor we'll have to watch there in that livestock complex over the next several weeks here. Big things I'm watching in the market right now, and of course we'll see, like you just mentioned, that the WASDE report, World Agriculture Supply Demand Estimates. We're not expecting to see huge changes in U.S. production in this. The March, April USDA reports tend to be a little bit muted because we don't see production changes, just demand. Basically, trade expecting the U.S. corn carryout to drop 10 million bushels, come in at 2.16 billion. U.S. soybean carryout increased 5 million to 320, and the wheat ending stocks up 2 million bushels from last month at 660 million. Again, those pretty quiet and not totally unexpected. On the global side, we're expecting a little bit more of a shift. 2.1 million metric ton decrease to the Brazilian corn crop. And that's on the heels of the recent hot weather they've had. And that'll take a direct reduction to the world ending stocks, although the world corn carryout's still ample at 320.4 million metric tons. The same story in the soy complex for that Brazilian soy crop expected to be trimmed about 3.7 million metric tons, still holding at 152.3 million metric tons. And that's enough to cause the world soybean ending stocks to dip from 116 million metric tons down to 114.3. I think when this data comes out on Friday morning, we will trade it for probably a very short period of time. And then trade will start to shift its focus and attention to the end of the month when we get to the 28th and we have the quarterly stocks, but more importantly, the prospective plantings data will be released. Those tend to drive the market into the spring planting season. I'll be watching that very closely. And of course, these outside markets, gold, new contract highs today, and that spilled over and supported the energy complex and the equities. The USDA, or excuse me, the Federal Reserve not looking like it's going to trim interest rates in the immediate future. Those are all factors I'm going to keep my eye very, very closely on. Bottom line is, I think our volatility is going to increase over the next several weeks to months here. I do have a feel that maybe we've put at least somewhat of a low end for corn and soybeans. I don't necessarily expect a rally or a straight up market from there. But if we can at least get futures to hold steady and stop slipping lower and lower and lower, that's at least part of a win, and then see if we can build on that from here going forward.
Thanks for coming. My pleasure that you joined the show for today. Thanks. You're welcome to join the show anytime, Karl.
Thank you. I appreciate you having me.
This is Karl Seltzer from Conus out of Michigan. We're back with Toni Dunker. Welcome back. I am joining with Toni Dunker from Advanced Trading in Quincy, Illinois.
I'm glad to be here today.
How are you? Welcome to the show, Toni.
I'm looking forward to visiting with you a little bit here, maybe about some LRP products. Is that what we're going to visit about?
World Agricultural Supply and Demand Estimate report on this Friday morning.
So those numbers will come out Friday morning at 11 o'clock. And, you know, hopefully we'll see a little bit more of a tightening of the supply side out of the South American production, but no guarantee on that.
How are the grain market for today's close bell in downtown Chicago and cattle markets, hogs markets?
So all of the livestock markets today kind of went the wrong direction for the producers anyway. Hogs, they were pretty hard on them, down $1.10 on the Junes. And if you look at the cattle markets, they were all lower today as well. When you go look at the feeder cattle markets, April feeders down $1.30. So today was they took back some of what they've been putting on the last several.
Would you like to go to tell our listeners about the livestock insurance for your farmers and ranchers in rural areas in central Illinois?
Yes. So livestock revenue protection is essentially allowing those producers to have a floor under what they will be selling down the road. And LRP, as we commonly call it, is a subsidized product that the government has made available through the Risk Management Agency. And it allows producers to put floors under what they're producing for up to over a year out. And you can even buy it on unborn calves and unborn pigs. So it's allowing the producer to establish a floor price in timeframes that are further out, up to a year out. And so I think it's a really good opportunity. These products are based off of what's trading on the Chicago Mercantile Exchange. So it's reflective of those prices. And it's available every afternoon that the markets are open. And depending on what level the producer selects, the government gives them a subsidy on these products of anywhere from 35 to 50%.
Like a ceiling floor with the grain.
So it would be just like a floor with the grain. Yes, it's buying a put option, very similar to that. Now there are some differences with the LRP product. It ends on a specific date rather than having, a month where it would end. So it goes to a specific date in time, and the producer has to have ownership of that livestock up to 60 days prior to that end date. So they have to show ownership of that livestock, and they cannot sell those livestock before that 60 days of the end date.
Now, I signed up for that. I were a producer.
So it's pretty easy to sign up for this. The producer needs to fill out an application that talks about their background just a little bit, give business interest. If they are married, they would have a spousal application that they filled out. If they're a corporation or an LLC, they indicate anybody that's 10% or greater ownership. And, it's a very easy application that can be filled out in basically about 15 minutes. And then once they have that application filled out, they are ready to go with getting specific endorsements. The LRP comes out every afternoon that the market is open, about 3:30 in the afternoon, and then that price is valid until the next day at 8:30 in the morning, and those are all central times. So essentially, you get to look at establishing a floor. Once the market closes, you have that look back until 8:30 the next morning. It's a pretty simple process to fill out the application.
Do you have final thoughts on this cattle expansion and demand estimate report?
So, we don't feel like we are seeing any expansion take place yet. We're not seeing a lot of heifer retention just yet. And we know in the cattle industry, it takes a long time because that life cycle and getting, a calf on the ground and getting it to market takes a lot longer than it would say for like hogs. And so, I feel like we are a ways away from rebuilding this herd yet. And hopefully that's going to be beneficial to the producers as far as maybe elongating a higher price for them. But there are a lot of unknowns out there in the pricing area, and demand is one of the biggest parts that can make a market fall apart when you feel like you have a limited supply.
A lot of hurdles.
A lot of hurdles from that perspective, and there's so much unknown. These are great pricing opportunities for cattle producers right now, and even on the hog production side there are great opportunities for those summer months this coming summer and out into the October timeframe. So it feels like a really good time for livestock producers to be considering using a product like LRP.
Thanks for coming. My pleasure that you joined the show for today. Thanks. You're
I
welcome to
real
join the show anytime. I enjoyed our conversation.
I enjoyed the opportunity to visit with you about it. And, if anyone has questions after they watch this, they can certainly reach out to us here at Advanced Trading. We're happy to help them with either LRP or using a put option, either one.
This is Toni Dunker from Advanced Trading in Quincy on back roads of Illinois. The risk of trading for the futures and options can be substantial.